And we are live. What's up, guys? Welcome back to another episode. And today's special guest is Jesse Gruber. And so his quick bio is he's bootstrapped two businesses to over $1 million in revenue while still in high school. That's fucking impressive. And launched an enterprise analytics startup at Stanford, serving brands like Walmart, Microsoft, Amazon. And then in another company, Neo reached $3.5 million. And now is a co-founder of Bloom, which we're talking about today because it's a pretty cool initiative and project. I just read the white paper about an hour ago. I do have some questions. So the first question is, I'm going to come from this as a neophyte, and I'm going to ask you, Jesse, what is that? What is Bloom?
Yeah, thank you. So thanks for having me on the show. Bloom brings credit to the blockchain. Around the world, there's lots of problems with credit. In China, your political affiliation can influence your credit score. In other countries, religion can influence your credit score. Even in the United States, it takes years to build up a full credit history, and you have to have debt to have a credit score. And so what that means is there's 45 million Americans, a lot of millennials who never opened up a credit card, for example, which don't have a credit score. And aside from all of the scoring issues, they don't work if you move to a new country. In most countries, like America, the scoring agencies are essentially monopolies. FICO is scored on like 90% of loans. And the algorithms that score credit haven't really been updated since like the 1980s. And so they don't use any modern signals. They don't look at things like utility bill income, cell phone income. And so we're taking all of these problems with credit and solving it by bringing credit scores to the blockchain.
So how do you solve it?
How it works is there's basically a few components. Bloom ID first generates a global identity for everyone. If you don't know who you're lending to, they can essentially run off with the money. And so once we establish that ID, Bloom IQ keeps track of all their debt obligations and pulls in lots of information about that person. So in addition to their credit report, if they have one, it also pulls in their utility bill payments, their cell phone payments, and any other financial data we can get on an individual to assess them. And then Bloom Score, the last component, takes in the identity component and the financial data to generate a global singular credit score.
Okay, so a couple of things I want to talk about over here. So you guys are building your own credit score system. So what's the difference between you and FICO then?
To a lender, virtually nothing. To a lender, they are going to use a similar score like they're used to in the exact same process they're used to, except that our score will have FICO as a signal, so it'll at least be as good, but it will also have lots and lots and lots of other signals. And in countries where there's governments and central banks and monopolies which essentially control the score and make it unfair, we will not be subject to those limitations. And so from a user experience standpoint, very little, but from a data standpoint, it'll include a lot more data. It'll have billions of additional people that don't currently have a score will be able to be scored. And lenders will be able to recognize that the score is actually an indicator of creditworthiness, not an indicator of factors that the government arbitrarily decided to.
So there's two things over here. Number one is, me as a lender, am I lending out tokens or crypto, or is this a fiat-based lending platform?
That's a great question. So you can lend out crypto if you want. It's perfectly sufficient for that. But no, most of I would say with the exception of a couple exceptions, every single lender we've talked to and signed up on the platform is lending out crypto. Lending out fiat. We just partnership with Self-Lender, which aims to bring credit to the creditless. And so we share a very similar mission in that we're trying to get people loans that don't have them. They're a fiat lender. We've got a lot of other fiat lenders that are going to be using Bloom as a alternative to scores. And so essentially for the borrowers, there'll be a lot of borrowers interfaced with Bloom that will never even realize they interfaced with Bloom. It's sort of like a behind the scenes replacement for the credit bureaus, if you will.
And you have a native utility token on that?
That's right. So our token actually has a few use cases in the ecosystem. The first and probably the most important is it's an anti-fraud mechanism for the generation and verification of IDs. The lender has to input token, which makes it that a fraudster or bad actor can't just try to guess and check 1,000 IDs until one's generated. Because if there's a little bit of cost associated with that for you or me or a lender, it's like nominal. It's nothing to me. But for a fraudster, that would have to do millions of attempts, really high. That means that, you know, as more loans are issued and as more lenders in the system, there's a much more demand for tokens. One token is a vote on the governance of the scoring. So that way we keep the score decentralized. And then we also do use the token as a payment and settlement mechanism for banks and data providers and people who are providing services for the network. But definitely the main two are the anti-fraud, which is tied to every ID and every loan that's generated, and the governance of the score.
So let's run it through. Say I'm a lender. I would hook up my bank account directly to Bloom and then lend throughout my bank account onto Bloom.
There will be a lending marketplace, but if you're a lender, you will do the exact same process that you've done today. It'll be no different, except you'll now, for the first time ever, have the option to either check someone's FICO score or check someone's FICO score and their Bloom score, knowing that the Bloom score includes the FICO score, but also lots of other pieces of information. And so lenders, you know, we're not trying to create any new behavior here. We think using visions in crypto, but with ours in particular, we're trying to go right to what's already existing in the world, trying to tap into lenders who are already doing an action and are already using a broken system, and just give them an alternative with crypto. And so basically lenders won't notice the difference between Bloom score and Bloom and what they're doing today, just that it'll be a more sophisticated, decentralized, distributed way for them to pull credit reports.
And so then me, as the receiver from the lender, I'm taking fiat directly into my bank account. So you mentioned there won't be any difference whatsoever.
Mm-hmm, that's right. So there will be, you know, certain interfaces that we're going to be building for users, though we're building. Right now, I'm working on the core protocol. We've been working on that for quite some time. It's just about done. We're launching a testnet version very soon. So this isn't theoretical. I know a lot of token projects are theoretical. What we've actually, my co-founders are studied at Stanford as well, and we've been in the space for a while. But we will, after the protocol is built, be building like a consumer marketplace for consumers to log in and see loans that are accessible to them. But our main like #1 priority is to build the protocol that lenders will use.
So I want to just, for everybody listening, I want to kind of reiterate the main difference. So how do you eliminate the centralization of FICO compared to you? What is the decentralized nature of Bloom compared to FICO? Yep.
Right now, FICO and the various equivalents around the world, FICO is checked on 90% of loans. There are factors that are included in FICO reports, which are proven academically for the last 20 years to not correlate to creditworthiness. You know, we're talking about things like, you know, the fact that your score drops if your credit gets checked, or the fact that you have to use 30% of your line of credit, the fact that, you know, closing out an old credit account that you're not using can damage your score. There have been academics that have shown that these things don't matter, but they do matter for the business of the lenders. You know, it's very nice if part of your score is to actually use your credit. It's very nice if part of your score is to, you know, align with the political views of the government in China, or be registered to vote, you know, in the UK. And so these are problems from centralization. Rather than let the governments or central banks decide what the factors of the score are, we let the people decide, the lenders, the borrowers, and the token holders. That means that no one party or institution controls the score. We at Bloom don't even control the score. We're more like guiders of the open source protocol. We'll have suggestions, but ultimately the decision of what data to include and how to weight it is controlled by the people.
You mentioned token holders. What's their responsibility in the network?
Token holders are essentially the checks and balance system of the ecosystem. So the majority of the token holders will be lenders for sure. They're the ones that have the biggest need for the token. But also data providers, banks and companies providing information to the network will have a lot of tokens. Consumers individually will have a very small number of tokens, but at scale it'll be a large amount. And essentially, they're responsible to ensure that the score is pulling in accurate information. They're responsible to whitelist certain data providers and vendors to make sure that bad actors and fraudsters aren't sending bad information onto the network. But most importantly, they're just responsible to help oversee the scoring process to make sure that it stays fair and not influenced by any central government. So practically speaking, it's very minimal oversight. We're using Aragon for governance of this aspect of the protocol, but it's like, occasionally voting on improvement requests is the main responsibility.
And then I'm assuming your token is going to be on.
Sorry, cut out for a second. Assuming it's going to be
on exchanges, on second-tier exchanges.
Right now, we're mainly focused on building the token as a utility token. I mean, there's certainly various things that happen in the ecosystem, but that's not really what we're focused on right now.
So the token will stay inside as a utility token based on the governance model. Is there any slashing conditions? Like, let's say you find out I'm a bad actor inside the ecosystem. What happens to me?
So basically, this gets into a little bit of the technical details, but we have a whitelist of data providers that when you query the network, you can see data of various trusted nodes and trusted data providers. And anybody can be a node or a data provider, but whether or not you have a historical track record of success is whether or not you're a trusted node or a trusted data provider. And to start sending bad information, you'll essentially lose your status of being a trusted provider, which means that you could still send information to the network. People could still trust your information if they wanted to, but it would be sort of like your email going to spam. The network would advise you not to listen to this information.
Mm-hmm. Are you guys having any plans in the future of like connecting it with oracles to kind of streamline kind of this authority? Like, let's say, for example, you mentioned you have your own Bloom Q type of scoring model in conjunction with FICO. Are you guys using any like social signaling models where, depending on the user's behavior on social media or how they surf the web, like for example in M-Pesa in Kenya, in M-Pesa they look at the usage of cell phone minutes. How often do you get credits for cell phone? Where do you use your cell phone? How do you use your cell phone? So the behavior of your actual cell phone usage determines your credit rating on getting more cell phone minutes. So I'm wondering if you guys are looking at any other different like social signaling like that, as opposed to just looking at standard variations of FICO, which you just mentioned a second ago.
Yeah,
don't work.
We're starting with things that are really tried and true, like 20 years of research, but there's actually a lot of really fascinating metadata. You mentioned a really great example. There's a lot of metadata that you can get from social media, from actual transaction logs. It's what you're actually buying from the store. There's metadata around available these days, and it's only growing. And everything is a data point. Including things that you wouldn't expect to be a data point can be a data point. What utility bill provider do you have? What cell phone bill provider do you have? What types of things are you buying? What's your activity online and on social media? And so, focused on one's social media is likely going to be a component in the long run. We don't have that incorporated into what we've actually built so far, just because we're trying to focus on things that are more global. But it's something we're definitely looking at, and there's a lot of really fascinating things we can pull from it.
Very cool. So obviously you mentioned being built on Ethereum, you're using IPFS for decentralization. What's your guys' game plan and roadmap for the whole scaling issue right now with Ethereum based on just transactions per second with nodes?
Yeah, we are built on Ethereum, but we actually don't are not a very blockchain intensive application. Is most of the difficult processes, the things that would normally contribute to a lack of scaling, are done in IPFS. Certainly, this can't have 7 billion credit scores on it tomorrow. We recognize that it's like that would be larger than the whole blockchain itself, but we are more. It's more of a concern for us of IPFS being able to scale than it is Ethereum. But like I said, Ethereum will have to get bigger to support our network at scale, and we'll just continue to support the Ethereum Foundation, work with them. If we ever had to help out on engineering things to contribute to that, we absolutely would. But it seems to be mostly getting better. The Lightning Network and other developments, there's plans to get a lot of it resolved.
So I see like the biggest hurdle for you guys, and this hurdle for any major, say, application like this or initiative like this, is user acquisition. The whole premise of this is a network effect. You need same amount of lenders, same amount of receivers, people interacting together. Through the interactions alone, it's a negative feedback system to get the data on improving the data.
Yep.
So where do you see right now the best low-hanging fruit for you to acquire users for the network?
That's great question. So fundamentally, you're definitely right. Definitely network effect. You need lenders and borrowers, data providers. There's a lot of different players in a lending ecosystem. And then even behind the lenders, there's people funding the lenders. There's behind the identity providers. And so a lot of different players, a lot of things have to fall in place for Bloom to work. The technical actual implementation of Bloom is a very minimal aspect of the actual difficulty of building this. So the short answer is we already have a lot of the relationships needed to scale this up, and they're already on board. The longer answer to that is my co-founders, John and Alan, built an identity verification and anti-fraud company that's used by Coinbase, for example, and a large number of financial institutions and U.S. crypto exchanges. And so we're quite familiar with the ecosystem in that who to target and where we need to go in order to bootstrap the network. So our current plan is we're going after lenders first. In fact, we're not even considering borrowers. We're going after lenders first who already have methods and knowledge to acquire borrowers. Lenders that are higher risk lenders, so they take more risky loans. They're willing to try new things. Lenders, they're businesses. They want to grow their profit. They want to acquire new users, and they're willing to take risks if it means more profit. And so we've already announced some on our blog. We just announced one with Self-Lender, which is a credit building lending company. They raised a few $1 million Series A. They've done over 40,000 loans, and they're excited about using Bloom to potentially get a lot more people, but they've already done 40,000 without us, and I'm sure integrating Bloom into their system will just make it easier for them to get more. Then over time, of course, as we get more lenders, then we'll work on the marketplace, then we'll work on some of the network effect components.
So as a business model then on Bloom, and correct me if I'm wrong, I'm sorry if I get this wrong, but the business model right now is a token appreciation, or are you actually guys, is there any other form of business model there?
There's not really a business model in the traditional sense. We're not trying to build a high revenue generating company. There are some aspects that Bloom would generate revenue other than token appreciation, just to fund the development of the protocol. In terms of there's some centralized style apps that we could build, think like a Coinbase style interface. But for the most part, I don't want to call it a nonprofit just because that has a lot of, legal connotations and whatnot, but we're essentially not generating any profit as an organization and just generating the minimal amount of revenue needed to support the, open source protocol.
And do you guys have figured out your token distribution model yet?
We are announcing that really soon. We have a real lot of lenders that have been interested in in acquiring tokens, and so we're just finishing up our conversations with them, and we're putting lenders first. Definitely, I know that might make the community annoyed, but lenders have the biggest need for our token, and so we're really focused on them. They're going to be holding a lot of our tokens, but then outside of that, we will be doing. I don't have an exact date yet. We're actually gonna launch the protocol first. We're gonna get some traction first before we actually announce it, but we are going to be doing like some level of a token distribution at some point.
And I'm assuming that's like in next year, or is it this year?
Sooner than later, for sure. I would much more likely a Q4 date than a Q1 date, but it's just going to depend on when we actually can finish the first version that's publicly usable and has utility to the general public.
Mm-hmm. I know though you mentioned it's going to be fiat based, but I have a suspicion that there's going to be a lot of lenders as well for crypto, just based on the nature of this.
Yeah, definitely. I think we've been in touch with, just about every crypto lender that's ever existed or had aspirations to exist. Many of them are already building applications on top of Bloom. So we've given them access to what we've built so far, which is mostly done, and a lot of them are already integrating their applications on top of it, and we haven't even launched the public testnet version yet. And so I think there's going to be a lot of business applications to be built on top of Bloom, even if and so I think when it's open source, there's going to be a lot of entrepreneurship. I'll give you one example. We're working with District 0x to build a peer-to-peer lending district that's controlled by no one, owned by no one, and facilitated by no one. Peers can, on their own, put up a need for a loan, and then the data comes from Bloom, the information comes from Bloom, and whether or not mind to give this loan or not. But it connects, peers and borrowers directly to each other through a peer-to-peer marketplace for loans. Very simple, very straightforward, nothing crazy complex about it, more of a bulletin board style of listings and loans. And it's a relatively simple application that actually has massive implications around the world, because where the places where there's no financial infrastructure, no lenders, you can default to peer-to-peer, kind of like local Bitcoins, if you will, did for Bitcoin trading. And so there's a lot of very simple applications that could be built by a developer or two on top of our API that I suspect will be built.
Cool. I like it. I think we'll wrap it up with that. Jesse, if people want to get more information about Bloom, best resource for them is?
Definitely just to read more our blog, but we've added over 3,000 people to Slack in the last 3 weeks, maybe closer to 4 weeks now. And I'm on there every single day. Our co-founders are on there every single day. Sign up for a newsletter, join Slack. Those are the best two resources. And then, of course, our blog is the go-to source for updates. Lots of information on there.
Thank you, Jesse. All right, brother. Talk to you soon.
Thank you.